Now, we've had some important numbers come out today. The ISM Manufacturing Index. The government also released September construction spending. And later in the week, we have that all-important jobs report. So let's take a look at some of those numbers and see what's moving the markets today with Ross Givens, Chief Market Analyst at Wealth Empire. Ross, thanks very much for joining us.
Thanks so much.
Let's get straight into it. What's the market being excited about today? First day of trading, is it going to follow on from October in terms of a bumper crop from the last 4 years?
Well, I think we are. You know, a lot of all the bears, so to speak, came out in August and September, right? The markets pull down. People love to hop in and say, oh, yeah, we're scared, to try to look safer. But really, when you look at the markets, between where we are with interest rates and where the market's valued, it's just not that expensive. So I think we're going to continue to see a really strong fourth quarter, and everyone's probably going to be really surprised at a strong 2016 as well.
Do you think we're going to see as strong as November as we are in October, as we did in October?
I wouldn't count on that. I mean, October was the best month we've seen in over 4 years, one of the best in history.
Too early to tell, of course, but...
Yeah. Well, I mean, that can happen when you have August, September like we did, right? When the market takes a 10% dip, well, 8% back up's a lot easier versus 8% on top of kind of a high level. So I don't think we'll see it as strong, but it's still a good time to invest in the market. I think we'll continue to see positive returns going forward.
Okay, just before I move on to those all-important numbers that have come out today,
sure.
Let's just quickly wrap up in terms of what you thought the key players were in the market today that you really had your eye on.
Well, I mean, I think a lot of the laggards kind of finally showed up today. A lot of the more boring stocks, a lot of the big hedge fund favorites are down the last couple of months, but you look at Microsoft and you look at Clorox making new highs today, and you look at a lot of these big blue chip companies just finally being removed kind of from the cumbersome fear of the market that we're going to get into a crash. So I don't think it's any one piece of news that pushed this market up. I think it's just traders kind of relieving that fear and allowing these stocks to trade up to the multiples that they're worth.
Okay, let's look at some of that data that's come out. Let's look at the housing, and let's look at the manufacturing index as well. Tell us a little bit about that, if you can.
So the manufacturing index, I think the number that came out was 50.1 versus 50.2 the month prior. And what that does, the manufacturing index is designed to show a figure of whether manufacturing is expanding or whether it's contracting. And that line in the sand, the zero line, is 50. So we're kind of right there. So it's not terribly bullish news, but it's not really bearish news either. A lot of these reports, there's so many economic reports out there, you can make yourself dizzy trying to keep up with them all, and they're just not. There's a couple that maybe are worth your time. The rest of it really is not. I mean, the market's going to tell the picture.
How important are those figures to yourself as someone in the market?
Minimally, actually. Peter Lynch, one of the greatest investors of all time, he once was quoted, it said, if you spend more than 13 minutes reading financial reports, you've wasted 10 minutes, right? Because it just,
That's a great statement.
Well, you can't predict everything. Everyone wants to know, what's going to happen with the Fed and what's the manufacturing number, what's the jobs report and housing starts and all these pieces. You'll go crazy trying to do it. I mean, if you stick to the basics, buy quality companies that have strong track records of growing their earnings, growing their revenues, growing their market share, and buy them at reasonable prices. It's a bottoms-up approach. No one that's done that has performed poorly in the market of the big picture, and it's worked for 20, 50, 100 years. It'll work for 50 more.
You talked about the Fed. Let's talk about that Fed
sure.
In terms of the interest rates, potential movement on that in terms of where it might go in the next meeting in December. They're obviously looking out for those two employment reports, one particularly coming out on Friday.
Sure.
What are your expectations for that?
If they raise rates, and again, the big thing to remember is this has been priced into the market. People have been talking about a rate hike.
So it's already factored in.
2 years, 3 years. If they raise it, it's going to be 0.25%. So I don't think it's going to be a market-moving piece of news. Maybe one of those pieces that, a 5% wiggle and then comes right back kind of a thing. But it's just not a big factor. I mean, if they came and raised rates from 0 to 1%, that could tank a market. But they're not going to do that. I mean, they may even come in at like 0.1%. But Yellen, think about it. I mean, she's the Fed chair. This is her entire legacy is based on her time here. Everything's led up to this. The last thing she wants to do is start her career by rocking the stock market, right? She's being very, very, very
Definitely
cautious.
doesn't want to do that.
You're only the most hated person in the world, right, who tanked the market with a single call. So that's why she's been very, very cautious. But look, it's priced in. It goes up December, it goes up February. Either way, it's not a big factor. When you look at what stocks are yielding versus the 2% you can get from a 10-year Treasury note, it's still an incredibly high gap, a handsome yield, and it's just not.
Very quickly, they're going to look at those unemployment figures as well before they come to any decision in December.
Yeah, I mean, obviously the Fed. So they're basing their decision on the economy versus the market, right? So they want to see all the stars in alignment. So she wants to see economy numbers that are strong. They want to see manufacturing numbers that are strong, which they weren't terrible, but it wasn't, a extremely bullish measure. So if that report's not really good, I mean, it's kind of another tick in the wait a quarter column for the Fed.
All right, we'll see what happens. Ross, thanks so much for joining
Hey,
us. Thank you.
my
Appreciate
pleasure.
it. Thank you. When the Rise Exchange continues, a queasy problem for a food chain famous for quality. We'll be right back.